About to go live.
No, we are live. So
Oh,
join us or something.
all right. Yeah, so hit it.
Yeah.
Yeah.
All right. Is it working? Did you saw it, right?
Yep, I saw it and I retweeted it. So,
Okay. Well, then that should be fun.
yeah.
All right. I'm for the recording. I'll just welcome you, and then we kick it off. Yeah.
Okay, sounds great.
All right. Lawrence Lepard, welcome back to Bitcoin for Millennials.
Hey, Bram, really great to see you again. The last time you and I had a great conversation in Madeira a while back, and
Yeah.
great to see you again.
Very happy to see you again too. I mean, one of the things I really love about talking with you is your openness. So I really appreciate you coming on again.
Yeah, right.
And
I mean, maybe too open, according to my wife.
no, I love it. I love it. I think the people love it too. So I'm super excited to chat today. Um, yeah, I wrote down some questions up front. Then I was just like, let's ask the people on Twitter X.
Right,
We
and I
got
saw all those. We'll try and get to as many of those as we can. Yeah.
tons of questions. Yeah, so we have about 90-ish minutes. Let's see how far we get. I
Okay.
tried to get some sort of flow in it. Yeah,
Okay.
let's just see
Yeah,
how
you
far we
you
get.
you tell me what direction you want me to go because I can speak forever, as you know.
Yeah. Yeah, so we're already going to say, like, for the comments, like, Larry and I like each other. I'm not going to interrupt him because sometimes they're like, stop interrupting, but
No, 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 we're
you
good.
heard what he
Whatever.
said. Yeah.
Yeah.
All right. um yeah, I wanted to start with I've been tweeting a bit about like how the European Central Bank is basically gaslighting EU citizens by constantly using the wrong definition of inflation in their communication.
Uh,
I mean, if you go to their Twitter account, it's basically wild. They always talk about price inflation, right, rather than money supply
inflation. Yeah.
inflation, which is the correct inflation. And yeah, in your book, you describe inflation not just as a financial issue, but also a moral one.
I
And I
do.
wanted to start with the question, like, how did you come to see the degradation of money as a moral failure, rather than it like just being wrong
The
economic
way the
policy?
system works. Yeah. I think it was reading the Austrians and pre-Bitcoin being a gold bug and just understanding kind of, I mean, not an engineer, but I think if I hadn't been a financial analyst, that would have probably been my career of choice. Just understanding it kind of base principle layer, how money is a measuring stick. I mean, it's like a tool that we use. It's universal, and we use it to determine prices and relative values. And you wouldn't change the definition of a mile or an inch or a millimeter or a pound or something that weighs a pound. Or a kilo. You can't have a constantly changing measuring stick and then really run an economy in a fashion that makes sense. And this was not lost. And so fooling with the money is something that's been around for a long time. There's some quotes in the book where I talk about how the folks who wrote the Bible got it right. I mean, back then the issue was dishonest weights and measures. I mean, obviously there were people who were doing commerce and they figured out how to, maybe, it's like loading the dice. They figured out how to create something that said this is a kilo, but it wasn't really a kilo, and they could short whoever was, on the other side of the transaction. And so these folks said, they're an abomination to God. It's a form of fraud, and it really is. I mean, if you kind of think about doing transactions, I mean, there should be truth on both sides. People should believe if I buy a kilo of something, I should get a measured kilo. And so money is just, it's the measure for value in terms of things, goods, and services. And when it's constantly moving around, you lose that measuring capability. And I think it becomes moral because people, this is, as the book describes, this didn't just happen accidentally, right? I mean, people figured out that there were, and just as back in biblical days, people were trying to figure out ways to cheat on weights and measures. In more modern days, bankers and central banks and the people who are involved in our monetary system have figured out ways to hide the fact that they're effectively stealing from savers and stealing from all of us over longer periods of time. And therefore, I think everyone would agree that stealing is not right. That it's morally wrong. It violates kind of the code of fair play. And so, the system we've got is a system that allows the bankers and the central banks to steal from all of us. And of course, what they do with the proceeds is really bad. I mean, the worst of which the things they do is the wars that they funded through it. So that's why, and to me, war is a very immoral act. I think that the average person doesn't want to go kill other people.
Yeah.
I think that probably 98% of humanity feels like they don't want to kill other people. But, some psychopaths really like that kind of stuff. And somehow those psychopaths often get to positions of power, and they abuse that power, and they use fiat currency to fund a war. So it's a bad thing. The whole thing's a bad thing.
Yeah, I really like the like using the illustration of the measurement, like of the standard measurement of something, right? Like
Right.
if I say I give you a kilo of something and it's like 500 grams, you would probably notice that it's not a kilo, right?
Right. Yeah,
Same
that's
as
half a kilo.
yeah, exactly. But with money, you cannot really see that basically. Yeah, like you cannot see that the dollar you had in your pocket a year ago is now worth less today, for
Well,
example, right?
yes and no. You can't see it, but you can, because we all measure. You can measure it in terms of prices of goods and services, and of course, that's what we call inflation.
Yeah,
And it's
but
just
there's no real kind of like
no. The
way
dollar is
to
still a
make
dollar.
sure it stays the same, right?
That's right.
Yeah.
That's
Mm,
right. And in fact, that's the great innovation of Bitcoin. I mean, but until Bitcoin was invented, every single currency, everything thing we've quote unquote called money, got diluted over time. And
yeah.
even gold, at 1.7%. Now that's a slow rate, but it's still dilution, and that's what makes Bitcoin so revolutionary. We now have a form of money that cannot be diluted.
Yeah. Well, many Bitcoin critics that follow or have been taught like Keynesian economics, they always say, Bitcoin is bad because you all talk about deflation and deflation is bad. But
Right.
I'm annoyed by it when people say that because they never finish the sentence, right? The full sentence is deflation is bad in a debt-based money system, but
Well, that's
like
correct.
they
Yeah.
never finish the
Or
sentence.
deflation is bad for debtors because
Yeah.
they have to pay back with money that's worth more than what they borrowed. Yeah.
Yeah. And so why is a debt-based money system so bad, and how does perpetual money debasement like tie into that?
Yeah. Well, so and it's the Keynesian model that's and of course now we've got it kind of on steroids, but the natural order of things, as Jeff Booth pointed out in his brilliant book on the price of tomorrow, is that over time deflation. So from a consumer's point of view, deflation is a good thing. I mean, if a consumer has a fixed set of fixed income and or savings, and they're buying things, and those things are falling in price, that's good. That means over time life gets better for them. They can buy more with what they have. And by the way, deflation is the natural order of economies. In other words, we've seen enormous deflation in things like TVs and computers and memory chips and all those kinds of things because we become more effective and more productive over time. And so you want to have deflation. It's a good thing. It makes deflation indicates that the economy is healthy and that we are growing more productive, and that productivity is resulting in lower price per unit of whatever it is we're trying to produce. So you want deflation, but of course Keynes turned that all on his head, and most of the Keynesian economists who follow him have turned it all on their head. And they take one example of deflation, which was the Great Depression, and they blow that up as the boogeyman. That means that we can't, it was just the worst thing that ever happened, and it was a very bad bubble bursting, and it did create natural deflation. But it's much different than the kind of deflation that we're talking about in a stable economy. But they've pointed to that as deflation being the boogeyman, and therefore we've got to continually grow the monetary supply, and we've got to avoid that deflation. And the problem occurs because we're trying to run a monetary system that involves building debt and borrowing. Money gets borrowed into existence, as the book points out, and it also gets printed into existence, as the book points out. And those two things increase the money supply, and thereby decreasing the value of each unit of money compared to all the other things in the world. And so, in a debt-based system, the problem starts to occur, particularly as you get further into it and the debt gets excessive, in that they can't service the debt without creating more money. The minute you spend money or you borrow money into existence, you've created a liability that requires interest and repayment. And so once you start down that road, you can't stop.
Mm-hmm. Yeah.
And that therein lies the problem. And honestly, they've been pretty darn good about kicking the can. And by the way, there've been restraints in the past. I mean, the gold standard was somewhat of a restraint. And so, the gold standard was fighting against fractional reserve banking for many, many years. And that fight ended up resulting with the bankers winning when, they realized the crash in '07 when JP Morgan bailed out the whole banking system. And the bankers said to themselves, you know what, we got a flawed model here. If the next one of these is going to come along and we're all going to fail. I mean, it's really good when we borrow money, make money on money that we've created into existence, but it's really bad when we get over our skis too far and the thing collapses. And so they created the Federal Reserve to address that problem. And of course, that just made it worse because the Fed immediately went out and printed a bunch of money to finance World War I. So, it's just a broken model. It's a broken system, and it needs to be overhauled and repaired. And we need to return to a sound money standard, which is really the thesis of the book.
Yeah.
And as you know, just to outline for those, I'm sure most listeners might be familiar with the book, but quick outline. I mean, the first half of the book is the problem. The second half of the book is the solution. And in the problem, I try to describe how we got to where we are, and I give a historical context that, even as far back as the founders of the United States understood the importance of sound money, and how, gold and silver were written into the Constitution because they were forms of sound money. They had experimented with unsound money and they'd seen the results. They didn't like it. And so, yeah, so, but that was, at least we were on a gold standard then. And even though they suspended specie payments from time to time, the standard was better in my view than what we have now. And what's happened is that system has just continually deteriorated to the point where it's now a monstrosity where, and the numbers are just getting enormous, right? The U.S. federal debt is approaching 37 trillion. Deficits are approaching two. I mean, I remember back in the Reagan years in the early '80s, Reagan ran a couple $100 billion in deficits one year, and people just went crazy. Like that was just the most outrageous thing ever seen. And one could actually even argue it wasn't so bad because it was some of it was invested productively. Some of it was to build up defense and defeat the Soviet Union, which we did. But yeah, so it's I don't know. That's kind of a rambling answer to your question, but the bottom line is, I think we need a rethink of all the economics that we've been propagandized with in Keynesianism, and the notion that we need debt to run the economy. I mean, we can invest in projects on an equity basis, which is actually how things were done in the 1800s. There wasn't a big debt market in the 1800s. If you wanted to build a business, you raised equity. You gave shareholders a piece of the business, and you built it.
Yeah.
And that's what things I think will look like when we return to a sound money standard. There will not be nearly as much debt because taking on debt will be a stupid thing to do. You'll have to pay back with sound money.
Yeah. I mean, this is why I love Bitcoin, but also learning from people like you. You've been a big part of my journey, as you know, right? Like just when I realized I needed to humble myself, I also started listening to some older Bitcoiners because I know that you came from a different time and place, a different system. It worked to a degree, but you've seen way more of this part of the history than me, right?
And
So
that's also part of why I wrote the book. I mean, not to, I don't know, I hope it's not seen as bragging. I felt, I thought about it. There's some great books written. I mean, Safe's book's fabulous. Lynn's, Jeff's, all of them, they're fabulous. But I thought to myself, they're all younger than me. I thought to myself, nobody has been here since the beginning and has been in the sound money trade as long as I have, at least in the Bitcoin community. Very few people have been there. And so I thought, well, it'd be helpful if I kind of told the history of it all because, I've been living this for 40 years. And so,
exactly.
then I ought to write it down for posterity. And so that's part of what led to the book.
Mm-hmm. Yeah. Well, what me helped a lot along the way is just like I find the reasoning for hard money is so much more rational and logical, right?
Yeah.
Like you refer back to like the Keynesians when they talk about deflation, they talk about the Great Depression, which was also the result of a bust,
An
basically,
enormous credit bubble, by the way,
right?
enormous. Yeah.
Exactly. And so in their thinking, when I listen to it, it's like, yeah, we don't really want to like come to terms with the fact that we are operating in a flawed system,
Right.
right? Because if we have to be honest, then that is what it is, right? So therefore, we deflation is bad. Anyone talking about a hard money standard and deflation is talking nonsense, right? And we just keep on going, kicking the can down the road. Like there is no agency, there's no
Yeah,
responsibility.
well, and they've used all the tricks. I mean, they used the CIA trick of saying, we got on tinfoil hats, and they've derided. I mean, before Bitcoin, they derided us as gold bugs, and they said we were conspiracy theorists, and they do everything they can to kind of just
And
literally dismiss all this stuff out of hand, like that's beyond the pale. I mean, there's a really good part of the book, if I don't know if you remember it, but where I spoke about how President Trump nominated Judy Shelton to be a member of the Federal Reserve Board. And Judy Shelton is a very respected sound money economist, and actually she's supportive of Bitcoin, although it's not really her thing. She comes obviously from the gold world, but she certainly had the credentials and much better credentials than most of the people who were on the Fed board. And she had it. She would have made, I think, a significant contribution to helping the Fed think about these problems. And the outcry and the reaction and the treatment that she received in Congress, it was just outrageous. I mean, I think they got a petition together with, I don't know, 50, 60, 70 people, Nobel Prize laureates, Keynesian economists, all signing it, saying she'd be dangerous. It would be absolutely outrageous to consider putting her on the Fed board. And then when she was in the congressional testimony, which I watched, I mean, they treated her with such disdain and disgust. It was ridiculous. And all the woman was trying to do was make a sound argument that having a standard unit of measure is a much fairer way of protecting people in this country.
yes,
And particularly people who save money. And but of course the government doesn't save money. They don't like people who save money. They want people to spend money and be in debt and be enslaved in their system, so that you believe in the bullshit that they tell us. And therefore they have to paint somebody like her as being extremely dangerous and outside of mainstream thinking. But I also point out in the book how Fed has really bought mainstream thinking. I mean, the Fed in the 2008-9 period, they were spending $350 million a year supporting monetary think tanks that were all Keynesian.
yeah.
And so if you were an Austrian economist, you were trying to get your PhD or get some support, forget about it. They don't want to hear that. So it's a very good psyop in the same way that they've psyoped us on so many things. They psyoped us on COVID. I mean, the original sin psyop in the United States, in my view, the thing that we need to confess for and go back and solve for, is when the government murdered Kennedy. I mean, to me, that was when it really all started to go downhill. So
This kind of ties into my next question, but
okay.
maybe you answered it
I'm not sure that's
already.
where you wanted me to go, but I just figured so I might as well
Well,
put it out.
I mean, once you realize that the money is corrupted and you're a subject in a financial system rather than an actor, and you're being gaslit all the time for, other people to profit from the fact that, they can just print money out of thin air that you have to spend your money and time on. I mean, that opens a lot of other doors
It
in
sure does.
thinking,
Yeah, you
in
start to
thinking.
question everything, don't you?
Yeah, yeah. So, I mean, I think we can both agree that, the fiat system is inherently unjust. And I
Yes.
wanted to ask you, why do you think so few people, even in positions of power, question the legitimacy or mechanisms of fiat money? But maybe you just answered it.
Well,
It's
no, let's
yeah,
address that. I mean, so I think so one, people will just react to whatever system they're in. And this moral piece of it, most people haven't really thought that through. And I'll give you a good example. I'm in Naples, Florida for the winter, and I went to a men's breakfast in the area that I live in, and there were probably 150 guys there. And I presented this whole thesis, and I explained that I thought what Bernanke did was wrong in '08, and what the Fed has done is wrong. And I got a lot of pushback. And the reason I got so much pushback from is they've all benefited from the system. They figure, and they don't necessarily, and they're not necessarily bad human beings. I mean, they just played the game. They're smart guys. And okay, you're going to inflate the shit out of stuff. All right, well, I'm going to buy stocks. I'm going to buy real estate. I'm going to use leverage. I'm going to, I'm going to buy the dip, right? I mean, I'm going to play this fiat game in a way that maximizes wealth for me. And they were smart enough and powerful enough that they could borrow cheaply and buy assets and so on and so forth. So, so there's a big segment of the population that I think, or not big segment, there is a segment of the population that benefits from it, likes it, and they don't want to hear the alternative to it, which you and I propose. And then I think the average, sadly on the more, coming down scale, because most of these guys are fairly well off, coming down a little bit more to the average middle class person or, middle lower class person, they're just trying to put food on the table and stay alive. And so they're not, and I'm not knocking them in any way, shape, or form, but I'm just saying they don't necessarily have the time to study it or think about it or be informed of it unless, now it's gotten a lot better. I mean, and before they didn't really have the mechanism. I mean, before the internet, they had to accept that what the New York Times said was truth, or what the Wall Street Journal said was truth, or what the Fed said was truth. They built up all these big structures that, very few people dared to question. And if you did question it, you were a conspiracy theorist nutter. You know what I mean? And so, the power, the centralized powers that be had a lot of control of the narrative. And, the beautiful thing about what's happening, and the hopeful part of the book, the second half of the book's the solution, right? The hopeful, I mean, the solution's a lot of different pieces, but I emphasize in the solution how technology and decentralization is really helping fix all this, and it's going to get a lot better. And that's the positive part of the book, that the internet came, the microprocessor came along, which led to the computer, which led to the internet, which now led to the internet of money. And these things are fixing this problem. I mean, the fact that we can now get our news from Tucker Carlson or Joe Rogan and not from CNN or MSNBC, that's a very useful thing. The fact that we can find truth on the internet and find people who speak truth on the internet, that didn't exist 25 years ago. So, and now it does. And so these centralized structures are under attack, as they should be, because they lied to us. And and the centralized monetary structure promulgated by the Fed, that's under attack too. And hey, we're winning, to be honest with you. I mean,
I think so too.
this is the best performing asset in the history of mankind. So
Yeah.
I mean, I'm very optimistic about where this is going. But let's not kid ourselves. We're right in the middle of a war, and there are people on the other side fighting very hard to maintain their privilege.
Yes.
So
It's while you're talking, I'm thinking maybe it's a fun thought, like how we just talked about. I don't think none of these people will take the responsibility and say like, yes, this was super flawed, we fucked everyone over and all these things. But how easy is it actually to just say like, yeah, we should move to this other system? Like, this system is decentralized. Like, they don't even have to give someone else the honor to run another system, right? Because running that system is personless. So it would actually be the easiest cop out for them to just say like, yeah, we should move to that system. No one is control of that system. That's great, right?
well,
And like,
and to be, to give a few of them credit, some of them are. I mean, I look at a guy like a Larry Fink, who was very much a part of the other system, and originally was very negative on Bitcoin. Is a fiat lord. He's gotten wealthy playing the fiat game to the hilt. But at least the man had the intelligence to, once he really dug in and did the work, conclude, oh my God, this is going to work. And I'm screwed. I've either got to adjust my business model to account for this, or I'm going to be left behind, like the guy who was running Vanguard, who shat all over it and then lost his job. So, I mean, but you're right. You would think if they weren't deeply embedded in the existing system, they would move over to this one. And those who are intellectually curious and intellectually honest have. I mean, I look at an RFK, and he saw the trucker protest, and he saw that allowed, Bitcoin allowed people to get around the seizure of their money and relating to, sending money to the truckers. And he was like, holy cannoli, this is a freedom technology. I'm behind this. And of course, then he understood the monetary side of it, and now he's a complete maxi. You know what I mean? So, I mean, look, once people become aware of it and understand it, it's going to be obvious, and everyone's going to get there. I mean, everyone will get there eventually, but each on their own time frame and all. I mean, I think the two biggest impediments to get there are, having done incredibly well in the existing system and being lazy, and happy and content and thinking that they earned all of that money that they have. And then the second thing is pride and lack of humility, and a willingness to be open-minded, such that there could be something else that they're not aware of that is a better system.
Yeah. Before we move on to another topic, I'd love to round up more like the inflation topic. I think that
Sure.
we talked about. In the book you argue, and we kind of just talked about that. Inflation is always and everywhere a monetary phenomenon, and governments have a powerful incentive to underreport inflation. We just mentioned that, right? So, what metrics do you believe most accurately reflect true inflation rate
Yeah.
that Americans and people all over the world are experiencing today? Should that be like the cheeseburger index, or yeah,
Well,
like what do you
yeah,
think?
I mean, it's complicated because there are a million moving pieces and there is deflation in terms of productive capacity. But the simplest and easiest one, I mentioned it in the book, is really just, it's the gross measure of M2. It's worldwide M2, and M2 grows in two fashions. It grows through fractional reserve lending and it grows through money printing, QE and direct stimmy checks. So if you kind of look backwards, if you kind of consider, I consider we've been in an inflationary era forever, but I consider the worst of the inflationary era started in 1971 when we went off of the gold standard. And, you know, since that time, it looks like M2 has grown kind of at 8% a year compounded. And the value of gold has grown at a similar rate, which I think is actually kind of interesting. And so to me, but we've had a reported inflation that's been higher, reported inflation that's been lower. Sometimes the inflation goes into assets, like it did after 2008. Sometimes it goes into goods and groceries, like it did after COVID. The inflation, the money goes in lots of different places, and so it's very hard to look at one price and go, oh, this is the price that we can use to measure for inflation. But really, I think Milton Friedman said it first and best when he said, inflation is always and everywhere a monetary phenomena.
Yeah,
And so a society produces goods and services, and dollars or whatever the currency is, those represent a claim against those goods and services. You exchange the money for things you want. And so if the pool of money grows larger without a commensurate increase in goods and services, prices go up, you know.
again, it's so logical. It's
It's
so
just,
funny. I
yeah, it's
mean,
not, this
I
is not, this is
no,
not rocket science. I
no,
mean,
exactly.
but
The
in the U.S., I don't know if you've had this in Europe, but the big one in the U.S., you've heard a lot of the politicians have come out and gaslight. It's these greedy
yeah,
corporations,
yeah, 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 yeah,
right?
yeah, yeah.
Yeah,
Well, yeah, it's one of these things that kind of like blew my mind. That, I mean, I don't have an economics or finance background, but a lot of things that when I read them and I find them very logical, they end up being Austrian. And also
yeah.
just this explanation that you gave, like it's just so, it's not rocket science, it's not
No, this
difficult,
is not
right? Like it's
complicated.
very, very basic, but I think it's more like a ego thing. It's kind of like,
Yeah,
am I being bamboozled? Like just reflecting on that question, I think, is a
yeah,
hard
and
exercise for a lot
look,
of
this
people
is
to do.
a subtle, the fiat monetary system is a con. They've conned us. They've conned the whole world, and it's subtle. It's not.
Hmm.
I mean, to the average person,
It's very intelligent, don't you think?
it's
Like
yeah,
it's
it's
very
very
smart.
intelligent, and they
Yeah.
and don't get me wrong, they wrap it in really nice words. I mean, I remember watching Jay Powell at his most recent press conference, and he kept emphasizing. I sent him my book, by the way. I don't know if you looked at it, but it basically, I'm hammering the Fed, and I'm hammering how, what they've done is not in the best interest of the people. And I thought it was interesting in his press conference. He repeatedly said, what we're trying to do is in the best interest of the American people. And I thought, yeah, okay, just keep saying that, pal, because we all know it's not true. But they're aware of it. I mean, you can't be as intelligent as the people involved in this whole system are and
Yeah,
not see it. It's just like I
that's what
called
I
them out
think.
at that Harvard Business School thing in the beginning of the book.
Hmm.
I mean, they know what they did was wrong,
Yeah.
and they were looking there, they were sitting there trying to gloss over and pat themselves on the back. And, bullshit. I mean, just total bullshit. They know what they did was wrong.
Yeah. All right. The first question from X that I wrote down.
Okay. Yeah. Let's go.
Why is it that the majority of analysts and economists looking at the U.S. data, and in general, I mean, we also me from Europe, we look a lot at the U.S. Obviously, um, people looking at the U.S. data are so convinced we are nowhere near a recession, especially citing GDP growth when there are significant data, including some that you apparently already shared, that shows debt levels are out of control. I saw a graph. Is that home delinquencies? Was that last week
Yeah. I
went
put that up. Yeah.
that went crazy?
Delinquent mortgages are higher than they were in '08. I think that
Yes,
might have been
that one.
somebody said it was multifamily, not single housing. I'm not sure, but
Mm.
um,
But the debt levels are out of control. People cannot service that. I see videos on like Instagram and sometimes also on X of like these accounts that do like car loans.
Yeah.
and stuff, and people are underwater on their
Oh
cars.
yeah. No, well, and if you see,
Crazy.
there's a
Yeah.
chart of credit card debt growth that I put up, I don't know,
Mm.
recently that show. I mean, it's, yeah, I mean, people are, look, there is
So
no
are we
doubt that,
near a recession? That's basically the
yeah, well,
question. What do
okay,
you
so,
think?
okay, let's go there. I mean, my belief is we are. It's subtle, but it's coming, and there are a lot of reasons for it, and it may take a little while to manifest entirely. But you're starting to see, slowdown in bookings and airlines. You're starting to see softness in retail sales. You're starting to see softness in GDP. I mean, you're seeing softness in DC housing prices because of all the Doge cuts. I mean, a lot of people, government employees, have gotten fired or taken an early buyout. So I see evidence that the economy is rolling over, but not necessarily crashing. To me, what'll drive what really happens probably is what goes on in the stock market. And one of the statistics that was out in the last 6 months I found very interesting was that the top 10% of the households can account for roughly 50% of consumer spending. I mean, sadly, the lower
Wow.
half of the United States is just literally hanging on by their fingertips, just getting by.
Hmm.
I mean, they're getting baked by inflation, and their incomes have not gone up. I mean, they're now starting to. If they're in a union, they might have gotten a pay bump, but so they don't have much lower to fall. They're just hanging on by their fingernails. But the upper half is especially the top 10%. They're doing okay. I mean, inflation hurt them, but they've got a cushion. They're making pretty good money. But they watch the stock market. Most of those people own stocks. A lot of them have their retirement savings in stocks. A lot of the boomers are heavily in stocks. And so, if the economy does start to roll over and the stock market starts to roll over, and it has been going down here in the first quarter, it was down, and I expect that to continue. They're going to do the very standard thing. It's like, oh my, I mean, they've had 2 or 3 years of up 20%. So, it's pretty easy when your net worth was growing your stocks were growing by 20% a year to say, let's take that extra vacation, or let's buy that house, or let's buy that car, or let's do whatever, second house, let's do whatever we're going to do. Things start going the other way, and people looking at the retirement, closer to retirement age. A lot of the money is in the boomers who are either at or close to retirement. And if they see the stock market go down 30 or 40%, that's going to have a big impact
Yes.
on what they do. They're going to pull back hard.
Yeah.
And of course, that's going to then lead to all those industries get impacted, and those hotel workers. I mean, you're already seeing all these people who were pyramiding Airbnbs in the hot cities like Phoenix and Las Vegas. They're getting their ass handed to them because people aren't renting Airbnbs in those towns and taking as many vacations as they did. So yeah, I see the economy. I see signs that the economy is rolling over, but not plunging, just slowly but surely rolling over. And look, honestly, I mean, I think it has some ways to go because, one of the things a lot of people I know, younger people especially, say, well, yeah, okay, we got to slow down. It's no big deal. We'll power out of it and all these stocks will come back. And that's a very easy response to have. Since 2008, basically buying every dip has made sense. But I think one thing that people aren't fully factoring in is how much distortion got created in the stock market as a result of ZIRP. ZIRP was zero interest rate policy, which we had from 08 to 15, and we had it again from 19 to 22.
Free money.
And free money, basically. Yeah, big players could borrow money for free and go buy assets, including stocks, real estate, whatever. And so, that leaves us with a stock market that's in the top 1% of overvaluation. I mean, kind of higher than 29, higher than 2000, et cetera. John Hussman has some great work on this. You can go to his site. It's all free. And so, and history shows that when something is that overvalued, when it starts to go the other direction, there's some people who've been playing it on leverage, because if it was going up 20% a year, hey, if you borrow and do it, you get 40% a year. It's even better, right?
But wait. Yeah, I have this thought again. Like, why it's
Yeah,
so
go ahead.
logical and radical? Like, if you can borrow money for free, right?
Right.
Isn't the thing you're borrowing worthless, right? Like,
Well,
because
so I
it,
said that in the book. It's a
right?
tautology. That's a line I used exactly in the book. When they went to ZIRP, I was shocked, and I
But
was like,
then when you buy a house with it, that's made with material, with man hours,
oh yeah,
literal
yeah,
sweat, calories,
oh
all these
yeah,
things. So you buy something that has no cost basis, and you buy, like, you get something that has zero
yeah.
cost basis,
Well,
and you buy something that,
this is what Sailor's doing. This is the Hugo Stennis trade. I mean, you're using worthless fiat to buy something that's limited in supply. Housing is limited in supply, not completely, but
Mm, yeah, fairly.
gold and silver and Bitcoin are limited in supply. And stocks are kind of limited in supply, although they can issue new ones and so on and so forth.
Yeah.
But
But
that's
the
right.
point is more that when it's free to borrow, then it's worth nothing.
Well, that's right. That's and the right. I mean, fiat currency actually is worth nothing. And if they have to take it down to zero to get people to spend and buy,
Mm-hmm.
well, that tells you right there that there's something very, very wrong with the system.
Yes.
Yeah.
It's so
Yeah, I
funny.
know.
Every
It's hard to
it's just
get your
hard
head
to.
around it,
Yeah.
and your reaction is similar to mine because when 2008 happened, I had one of those like life-changing moments where just, my whole world got, turned upside down. I was just like, I can't believe they're doing this. They can't do this.
Yeah.
I mean, not only they bail out the
I
banks.
know this, but we're talking about it again, and I'm like, what the fuck?
Yeah, right. I mean,
It's
and
wild.
so
Yeah.
yeah, it was a what the fuck moment. I mean, it was like, oh my God,
Mm.
how can they do this? And so and that action benefits those insiders. I mean, the book talks about the Real Housewives of Wall Street. I mean, the chairman of Morgan Stanley's wife borrowed 200 and some odd $1 million non-recourse from the Federal Reserve, to buy assets. And what that means is she had to put up some equity, not a lot. And that meant that if those 200 million in assets grew in value, she'd get the gains.
Yes.
And if they went down in value and the whole thing was tapioca, the Fed would cover her. I mean, it was just outrageous corruption, outrageous. And that's what the book is trying to show.
Just a side question. I mean,
Yeah,
I'm sometimes in the trenches. My friend Richard Byworth on LinkedIn, we're we're having discussions with people that
yeah,
they comment on what Saylor is doing. He's borrowing literally worthless fiat money, and he's buying the hardest money to ever exist.
right.
And they are calling him out like, oh, Ponzi, blah blah blah. But now I'm just thinking, he's just exposing what these people have been doing all the time,
That's
right? Like
exactly right.
he's exposing what they are doing.
No, that's exactly right. He is running. He's doing what Soros did to the pound. He
Hmm.
is running a speculative attack on fiat currencies. It's a thing of beauty. It really is. It's a thing of beauty. And people call him. I don't know. People knock him, and I don't know why. I mean, I think he's going to be the richest man in the world
I agree.
by a
Yeah.
large measure
Yeah.
in
Well,
10 or
if
15
people would
years.
understand that, then we would be at $1 million Bitcoin probably already.
Yeah.
But
Well, we'll get there eventually.
yeah. So, do you think there will be kind of like i- is will there be like a crisis catalyst, something that finally
Yeah.
forces a systemic change,
I
and
I
what's the timeline?
Yeah, that's a great question. I've talked about this in other pods, and the book talks about this. And so first, I want to say nobody really knows, including me. So just take all this with a grain of salt. I thought 2008 was the end of the world. So, and they could kick this can for another 20 years, but I kind of don't think they will based on the math of where we are right now. Um, so my belief is we're in a fourth turning. They typically last a certain length. And I think this one started in '08. They tend to be between 20 and 30 years long. So, if it's 20 years long, then we go up to 2028. And if it's 30 years, we go to 3038. I don't think it's going to be 30 years. I think sometime in the
No,
30s, in the 2038 area, we're going to have to reset the monetary system because this one's going to be so obviously failing. And so,
well, that's why
um,
I'm focusing on millennials, because I think we are the generation that
yeah,
can
you're the
flip this
generation that's
basically.
going to focus on it. And
I
you're going
think
to
so.
fix it. I mean, you kind of are the hero generation that's going to make it right and return us all to sound money. I mean, so, you and Jack Mallers and everybody else. But yeah, so what's going to catalyze? Well, I talk about it in the big print. I mean, it's, that's very hard to predict and hard to know. But, the clues are the price of gold, the price of silver, the price of Bitcoin, the price of the stock market, and the US 10-year note. And it's interesting, the US 10-year note used to be the base layer of money. It was the safest thing you could own. It paid you a return, and it was just rock solid. And in Bitcoin terms and in gold terms, since 2020, it's been destroyed. I mean, gold is up 220% since that time in bond terms, and Bitcoin's up 2,200% since that time in bond terms. So these are, to me, very big clues that we are truly in a sovereign debt crisis. And that in a sovereign debt crisis, what happens is the currency either fails or is heavily inflated. or or the economy collapses in order to try and make the currency sound, which is kind of what happened in 29 with Britain and the U.S. We chose to try to stay on the gold. Well, we revalued the gold a bit, but then we went back and we did stay on a semi-gold standard. And of course, that led to an outright societal collapse in terms of the depression, which the Keynesians have used as justification for all the shit they've done since then. So yeah, I mean, my sense is it'll probably come with, we're getting there now. I mean, there's some clues. I said earlier on another podcast, there's a little bit of smoke coming out of the theater. I mean, I think there's a fire in the theater.
Hmm.
Smoke's starting to show up. I mean, Powell in his last press conference took us from 25 trillion or 25 billion of runoff per month in the balance sheet to 5. It's a big reduction. And he mentioned that the runoff from the MBS stuff might be used to repurchase treasuries. So that's a clue. There's been talk, Basant has been talking about this SLR, supplementary leverage ratio, which would allow the banks to buy more treasury bonds. And then most recently, it was very well exposed by several people. I retweeted it on Twitter. James Lavish probably laid it out the best. The Brookings Institute floated this idea that the basis trade, the U.S. hedge funds are running a basis trade and buying a lot of treasury bills because they can lever them up and make a spread on the difference between the futures price, the current price, and which works fine when the markets are stable. But in unstable markets, it blows out and everybody goes bankrupt unless you print more money. And so the Brookings Institute in the United States is talking about a plan where they're preemptively going to protect those hedge funds and give them swap lines so that in case the market becomes unstable, they would do what we all know they have to do eventually, which is print money. So sadly,
when I hear all these things, I'm just thinking like it's just numbers. It's
it's
like
all just numbers.
they're messing around with numbers.
Yeah, just look. You don't have to follow all the intricacies and the plumbing and all the names and the terms and the way it's real simple. They got a printer. They're going to use it. They have to use it because mathematically,
yes,
the debt is unsustainable without more base money underneath the debt to support it. That's just a mathematical fact. So how they do
27
it,
trillion, no, in this next 4 years, 27 trillion rollover debt. No,
yeah, they've got all this debt to roll over, and without, especially, and wait until the economy starts to slow down, and transfer payments kick in, and the deficit gets worse. I mean, I can see, and I believe there's a good chance we're going to enter a debt doom loop where, they're going to be forced back into QE, back into ZERP, back into supporting it. And, they'll give it new terms, they'll disguise it, they'll do it in some different way. I mean, just like this Brookings Institute paper said, I mean, this would probably be some off balance sheet swap line that they'll just, put over in a footnote. I mean, Silicon Valley Bank failed and they said they weren't going to bail it out. And Dodd-Frank, the black letter law of Dodd-Frank, which was written to prevent another bailout like what happened in 2008 because it was so incredibly unfair, the Dodd-Frank rules got run over when Silicon Valley Bank failed. They said, no, we're going to go use the systematic, threat exemption. And so they bailed out Silicon Valley Bank. And they created a new thing to do it. They called it BTFP, a bank term funding facility or something.
Program,
yeah, whatever it was. I mean, I called it buy the fucking paper. So, look, they're going to do something, and we don't know what it is, but we do know what it'll be. It'll be inflationary. It'll be money printing inflationary to keep the system going. So, and that's why I tell all my clients, you need to own things with your savings and with a long-term perspective, understanding that there's volatility in the shorter run. You need to own things that cannot be printed. And the best one is Bitcoin, and the next two are silver and gold, and after that, real estate and a few other things. So, because if you want to preserve your wealth, those are going to be much better at doing it than bonds or fiat currency.
This was also a question from X. Was is it QE infinity time yet? Is the big print coming?
Close.
I think
We're
you
getting
just
close.
answered that. But what will be the effects? Like how will we know?
Well, we'll know when the Fed capitulates. Right now the Fed is saying, I mean, we'll know when they call the government. So right now they're staying flat, although their futures are now saying they might do a cut or two this year. But we'll know when they say, hey, inflation is the inflation, even though inflation's hotter than they want, At some point, they're going to say this. They're going to say, you know what? Inflation is not exactly where we want it, but now the full employment part of our mandate has become more important. And we see signs that the economy is cracking. And therefore, we need to aggressively drop rates and maybe ultimately
Yeah.
not only stop the bond runoff but re-engage in QE of some form. So I mean, and they'll try and get the banks to do it with the SLR. They'll try and get the hedge funds to do it by giving them a swap line, but they'll disguise it as much as they can because they know that we all know that it's inflationary and they don't want to send that signal. But they won't have a choice, because if they don't, the 10-year is going to go through the U.S. 10-year is going to go through 5%. By the way, there was a very interesting episode of this in the fall of 23. The U.S. 10-year went through 5%. This is when they're still in the hiking cycle. And, things started to kind of break. The stock market went down. A lot of other things had trouble. And within 2 weeks, 12 Fed governors had come out and said, no, 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 don't, the rate hiking cycle is over. We foresee that we're going to be on neutral to lowering in the future. And the bond market calmed back down. Do you know what I mean? So they can jawbone it for a while, but eventually the bond market's going to lose faith in them and just say,
Mm-hmm.
hey, you know what? You guys are never going to stop printing, and we're the suckers at the table. Screw you. We're selling our federal, our U.S. federal government bonds, and that's going to shove interest rates up. And with 37 trillion of debt, that's going to make the deficit bigger, and you can see where this is going, right? And so then they're going to have to sell more bonds into a fixed size market, and interest rates go higher. So eventually, you hit the point that every emerging economy that's ever had this problem, there've been plenty of them, runs into, which is the government has to buy the bonds. And so basically, it's, I
How
mean,
long do you think that's been going on? I mean,
oh,
if
what do you
if
mean?
you if you approach it in a rational way, right? Okay, I have 100 million, whatever gazillion, and I'm from a company or a fund or whatever, right? And all my financial advisors are saying you should buy, government bonds, etc., etc. But then, okay, I look on one side, okay, there's a certain percentage, and then like on the other side, okay, this country is multi-trillion into debt. There's a rollover, then and then, blah blah blah. Okay, I'm still getting the XYZ percent. I'm just gonna do it because some guy says it. But if you look at it, like, do these people understand what money is or not?
Well, some do and some don't. I mean,
Okay.
with respect to buying the debt, I mean, remember that there are big pension funds and they're big pools of money that kind of have a mandate that says they have to buy these
Yeah.
government
So
bonds.
it's
And
just
so,
that's where I wanted to go. Sorry.
yeah,
That's where I wanted.
even though
Like,
it's a
it's been told. Yeah. Exactly.
even though it's a stupid thing to do,
That's my point.
it's almost encoded in their DNA or maybe even in their operating statements
Mm-hmm.
that it used to be the case. I mean, so you're running I don't know, the New York State Teachers Pension Fund, right?
Exactly. Yeah.
And teachers and you're responsible for the retirement of all the teachers in New York State. Well, you can't lose that money because those people really need that money when they retire. And so, back in the day, I'm sure they put in operating statements that, thou shalt have X percent of our fund in, U.S. Treasury bonds because they're the safest form of investment, and sadly, the people running it today, in some cases, I'm sure they're adjusting, but probably in many cases they're not, and they're just following that mandate, not realizing that yes, it's safe. You'll get your money back. You'll get your 4% interest in your principal back. The problem is, by the time those teachers retire, that's not going to buy very much because of all the inflation. So there is a bond market, and there always will be a bond market because of some of these big pools of capital that have a bond mandate. But
Yeah.
at the margin, sovereigns, I mean, international bond, I mean, on balance, since 2014, foreigners have not bought our bonds. I mean, throughout the 2000s, as we were running deficits or doing whatever we did, the war on terror, all that stuff, foreigners were buying our treasury bonds. And so we could do what we want, and it was finance. Since 2014, they've stopped doing that. It's actually the treasury bond holdings, foreign treasury bond holdings have been sloping downward steadily.
Mm.
And that's because they're not stupid. I mean, they can
That's what
see,
I mean. Right?
yeah,
Like,
they
yeah.
know that they're the sucker at the table. And so they're
Yeah.
like, hey, I'm not going to do that. And you're seeing it. I mean, this is why you see foreign central banks and other organizations, I mean, we need a better neutral reserve currency, right? The dollar's not a very good one because they print too many of them.
Mm-hmm.
And so this is why we're seeing all the movement into gold. I mean,
Yeah.
I know Bitcoiners don't like to talk about gold much, but gold is a great leading indicator for what's going to happen with Bitcoin because it's much more broadly distributed and everybody knows it's money in old form money. And so, you're seeing central banks, you're seeing sovereigns, you're seeing all kinds of people. They may sell their goods and services, like the Saudis, for example. I mean, the petrodollar was really built on the whole notion the Saudis would sell gold, they'd receive dollars, and they'd recycle the dollars into treasury bonds. That was the deal. Well, they're not doing that anymore. They sell oil, they sell it to the Chinese, they sell it for yuan. If they have a need to buy something manufactured that the Chinese makes, they keep the yuan and buy it. Or if they don't buy treasury bonds, they buy gold on the Shanghai Gold Exchange. And the volumes on that Shanghai Gold Exchange have been going up steadily, since 2022 when we grabbed the Russian reserve. So, it's a changing system where the dollar is losing its supremacy because of the mismanagement of the U.S. government and fiscal situation, right?
Well, it's like we prepped this, but we didn't because I actually wanted to talk about gold.
Okay,
Um,
yeah, go ahead.
as I don't know, can I
Sure,
call you a
I'm
reformed
always
gold
happy to
bug?
talk about
Can
gold.
I call you a
I'm one
reformed
of those
gold bug?
odd people that I actually love both assets, and I try to calm down the warring factions. When the gold guys go after Bitcoin, I get mad at
Okay,
them, and when the
then this
Bitcoiners go
question
after gold, I get mad at them too. So
this question is for you, Larry. Okay,
yeah,
so why do Bitcoiners and gold bugs struggle to see eye to eye while there's a lot of merit behind the idea that they should actually get along well?
yeah. Well, I think that it's the notion that there can only be one, and somebody has to be first, and I mean, one of the things about Bitcoiners that does piss me off is that some Bitcoiners behave like they invented the concept of sound money. Do you know what I mean?
Mm.
And they give zero respect to the entire gold community that's been fighting this battle for 40 years. Okay, so just because they've got the best solution doesn't mean there weren't people here fighting in the trenches before they showed up. So I would
Yeah.
ask some of the younger Bitcoiners to be open-minded and understand that the gold guys get the problem. Maybe they don't fully embrace or understand the new solution, and some of them are very turned off by the brashness and the shitcoinery and some of the bullshit surrounding crypto. Do you know what I mean? And
Hmm.
that sets off all their alarm bells for fraud and bullshit, and it should, as you and I
Yeah,
both
that's
know.
true.
But Bitcoin's not crypto; it's different. I've tried to emphasize that. Many of them have come around.
So what
But
are arguments you use then? What are
yeah,
arguments you use for non-Bitcoiner gold bugs?
well, I point out, I go back to Lynn's work and just, money's a ledger, right? It always has been a ledger. Before gold existed, there were tablets that kept score of shit.
Yes.
Gold wasn't even around yet. So if that's the case, if money is a ledger, because a lot of gold bugs, they they lay their claim on it's physical. You can touch it, feel it. It's
Hmm.
analog. It's there. It has other uses, etc. And my belief is, actually having other uses isn't a benefit. It's actually rather it's a problem. I mean, money
Fully
money
agree.
should just be money, period.
Yes.
And a ledger is a perfectly acceptable form of money. Arguably, if it's a secure ledger that can't be debased, it's probably the best form of money, which is what Bitcoin is. So I try to get them into it doesn't have to be physical. It's just a ledger view. And then once they get there, I say, let's consider these two ledgers, one against another. One, you got to physically verify it. They can lie about it. It's very centralized. It's in Fort Knox, but it's probably not because they probably don't have what they say they have. You can counterfeit it. They're tungsten plated gold bars. You've got to assay it, etc. So there are problems with all of that. Whereas the triple entry accounting on Bitcoin, you can see it. You can see where it came from. You can see where it went to, and you can see it live on the chain every 10 minutes. So that's kind of an advantage. It's also much easier to transact in and move. Shipping gold around is expensive, and I can do a Bitcoin transaction with you in 10 minutes. It's I just try and get them to think more broadly about what really money is, and then as Carl Menger defined it, money is the most liquid. We all agree upon is the most liquid good. It's kind of it's a shared illusion. What we all believe is a solid store of value. I mean, the store of value use is the first use of money. The medium of exchange is the second use of money. And but the first thing that money should do is store value through time and space, and it does that by
Yep.
being rare and hard to replicate, and you have to work to get it.
Yeah.
And of course, you have to work to get Bitcoin because you have to spend money on electricity to mine it, or you have to transact with somebody else and buy it. And the same is true with gold. You have to dig it out of the ground or you have to buy it from somebody else. Fiat, by definition, is different because you don't have to spend money. The government can create it. And that's work without, that's proof without work, or that's a form of money that they can just digitally spin up. And so that's therein lies the problem, right?
Mm-hmm.
That
Yeah.
they're going to spin up too much of it and dilute it too much, and it's going to trend towards worthlessness, which is what it's doing. So,
Yeah.
but back to your Bitcoin gold argument of the guys fighting with this. I mean, I try to get both sides just to calm down and to recognize that they each are sound money. One's analog, one's digital. And that, we're not, gold guys aren't forcing Bitcoiners to buy gold. You think Bitcoin's a better choice? Go 100% Bitcoin. If I were young, that's what I would do. But if you're 90 years old and you don't like seeing your assets go around a lot and having maybe a 50% drawdown because that kind of freaks you out, well, then maybe you want to buy gold because it's, a big drawdown in gold would be 5 or 10%.
Mm-hmm.
So now it doesn't have the upside alpha. When these things go up, gold goes up 50%, Bitcoin goes up 4x. So I mean, they're different assets. One's fully distributed, one's not.
Yeah.
And the adoption curve is what's driving the growth in the price of Bitcoin right now.
I like what you said about store value and medium of exchange, right? Because
Yeah,
I recently had on a big Dutch YouTube channel, I had a discussion with a big gold bug, and he's talking about, Bitcoin or gold has been currency for many, many years. But what you said, the store value part comes before it. Like, this is superior savings technology, and I could exchange Bitcoin for any currency and then use that currency
yeah. I
to
mean,
transact.
it,
But the extra benefit or feature of Bitcoin is that I can actually also transact with it, right? So
yeah.
the
And if you're pretty honest about it now, I mean, neither one of these I'm talking gold and Bitcoin now. Neither one of these is a particularly good medium of exchange. I mean, people
Mhm.
aren't doing transactions in gold terms. I'm not buying things. I'm not delivering gold coins to buy things. Look, the Lightning Network is growing, but let's face it, compared to all of the fiat transactions that are taking place in the world, the Bitcoin and Lightning transactions are just a sliver, a tiny, tiny sliver of the transactions. But what's emerging, I think, is okay, if you're an investor, you want, or you're a saver, you want to save in gold terms or Bitcoin terms, and then you need to spend your money. Great, the conversion's simple. I mean, with all the computers, internet, everything else we've got, I mean, you can turn gold into fiat very, very quickly. I mean, a little slower if you're sending your coins to somebody or taking them to a store, but and you can certainly turn Bitcoin into fiat very quickly. So the fiat rails are the payment mechanism right now, and gold and Bitcoin are the two stores of value, and they do compete. And I guess that's why the gold bugs don't like the fact that Bitcoin has taken away some of their shine, and the Bitcoin guys don't like gold because they think it's old and stupid, and it takes people who hold gold should be buying Bitcoin. But what both camps should realize is that the enemy is fiat.
Yes, I agree.
That's your enemy. That's what's making the world a bad place. So we
Yeah.
need to get to a sound money standard, and the world won't be so bad.
Two tweets I'm thinking about that I
Yeah,
posted, I think today. Yeah. So the difference between, no, wait, I have to scroll down a bit. Let me see. The Bitcoin time chain is the highest form of ordered information in the world, audited and confirmed every 10 minutes. The information in the time chain is the pure truth of this monetary system.
yeah.
Therefore, it is the money with the highest trustworthiness ever to exist, right? And that kind of connects to what you said about that ledger. It's about the purity and the integrity of the ledger and the
Yeah,
continuation of
I
that.
completely agree with that statement. And it's also the largest computer network in the world. One of the comments on your thread talked about how,
Yeah,
the value of
Hashrate.
the thing isn't just in the coin, it's in the hash. I
Yeah.
mean, this is the
It's
most
also the
powerful.
economic power that's
Yes.
geared towards creating the energy
Yeah. I
power,
mean,
right?
there is so much hash in this network
Hmm.
to secure the integrity of this thing.
Yes.
It's just
Yeah.
it
Yeah.
blows my mind.
So you
And
can use it as the ledger, right? Like that's the
yes,
whole point.
it,
The
it,
whole
it is
underlying thing is the
it
ledger.
is it is probably the only thing we know right now,
Yeah.
to be absolute truth. I mean, it's
Engineered truth, I call it.
engineered truth. Yeah,
Yeah.
mathematically engineered truth. I mean, I mean, a
That's it.
lot of
Yeah.
people get metaphysical about it. It's a little hard to get your head around, but yeah,
Yeah.
I
It's
mean,
the truth in this system, right? So it's not truth as in subjectively.
no,
It's objectively the truth in the
it's
the whole
objectively
goal
the
is to
truth.
keep the truth,
Right.
right? That's the whole
Yeah, it's
goal.
objective truth in a
Yeah.
mathematical protocol that
Yeah.
can't be messed with.
Yeah. And
Yeah.
so another tweet I had to think about that was also from today. I said the difference between Bitcoin and crypto is that Bitcoin is a valuable ledger, right? It's a system slash a
Yeah.
network of true information that subsequently makes its token valuable, right? So you can use
That's
the
right.
token.
Yeah.
The token is kind of comes after the fact that there's a truth ledger. And
Yeah, that's right.
crypto is an attempt by different organizations, teams, so it's not decentralized, to empower a system slash network by use of a token, or rather, they attempt it by saying their token has value and you should invest because it will fuel a valuable system eventually. They are not the same. It's the
Not
other way
even
around.
close. Yeah, not even close. And there's a whole chapter in the book about how, Bitcoin, not crypto. I mean, it just
Yeah.
sadly, crypto has hurt Bitcoin's adoption. I mean, it put, a lot of people got burned and rugged on all these crypto projects, and there's still a lot of gambling going on over there. And, I mean, in talking to gold people, I mean, I probably the number one, why, two concerns I would generally hear. One is they'd point to Sam Bankman-Fried and say, how can you be involved with all that stuff? It's just a bunch of fraud, and making the assumption that Bitcoin was Sam Bankman-Fried, which isn't true. And the second one was the government's going to shut it down. Yeah, it's a great dream, and I get it. Non-state money, that's what gold is. But the government's going to shut it down. But when the ETF came along last January or so, that really changed that. And then now the administration of the United States is quite friendly. Now, don't get me wrong, that could change. I mean, if things don't go well in the next 4 years, there'll be a blue wave. And
Yes.
we know that the blue team in the United States is not particularly Bitcoin or crypto friendly. They're not gold friendly either. And they very much live off fiat land. And so, for those who are all excited about all the potential of the Trump thing, I'm excited too. But I'm also realistic, and I recognize that we're in a fourth turning, and political systems in fourth turnings get very, very stressed, and we've been kind of ping-ponging back from these two extremes. The crazy left, and then the right, and so there's not a central movement. I mean, what we've got to do, Bram, the important thing is, another reason why I wrote the book was to try to educate people to understand that the money is what's broken, that the society feels broken because of all the political stuff, and everyone's hurting and can't pay their bills. But really, that's all because of the money. And if we could get to a money system that's not broken, the society would repair itself pretty quickly. And so, as this brokenness becomes more obvious and more apparent, I think the most important thing we can do is orange pill and inform and educate our citizens about why the sound money is the base layer of a good society, so that when things do get critical, when this situation goes critical, which I think it will, we have politicians who stand up and say, you know what, the money was broken. We're going to fix that, and here's how. We're going to go to this standard.
Well, or the trust in the money is eroding because there are people like Bitcoiners that say it's shit.
Well, that's the blue camp spin on it, right? And we're going to tax the shit out of Bitcoiners and blah blah blah, all of which would be a huge disaster. But I think we've got our nose under the tent now, and the Bitcoiners are going to be extraordinarily rich, and so we're going to be in a position to perhaps influence political events as they go forward. So.
Yeah, well, we'll get back to that because I have a few questions, but I
Sure.
wanted to kind of like round up the gold
Yeah, I
part.
know
I
there were a
wanted to
lot of
talk
good
about.
questions on there. We got to get to the
Yeah,
manipulation
yeah, yeah,
question.
yeah, yeah.
I know some people were worried about that.
Yeah, we'll get there. Yeah, so I'm going through my questions,
Yeah,
but
right.
I think a good one because we mentioned Larry Fink today.
Oh
if
yeah,
we
I
talk
saw that.
about
Yeah.
Bitcoin and gold, right? Larry Fink said in, I think it's the BlackRock annual letter,
Yeah,
if I'm correct.
Preston Pish had a tweet on it. People
Yeah.
should go to his thread. You'll see it. Yeah.
He says he said something about the USD possibly losing its world reserve status to Bitcoin,
Yeah,
which, in the, I'd say, gold bug mind, that must
that's
have
pretty.
created something.
Yeah, well, I'm sure some gold bugs are bummed out about that, but it's pretty forward thinking. I mean, look, if you're smart,
Huge
and
signal, don't you think?
yeah, it's a big signal. And if you're smart and you study this, I mean, look, Saylor doesn't talk about the dollar dying. Okay, he's too smart to do that politically. He won't go out and say that. But
Hmm.
anyone who looks at this seriously and just understands how systems works, understand that the dollar's toast. I mean, there is almost zero doubt in my mind that the dollar is going to completely and utterly fail, and that my kids, my kids are in their 20s, that my children's children will transact in satoshis. That we will be on a full Bitcoin standard. So and it's just simple math and human adoption and the nature, the will of people to do what's in their own best interest. And more and more people are learning about this technology. More and more people are coming into the camp, and it's a system that rewards early adoption. And so that will just continue to grow. And the what it'll do is it'll just squeeze out fiat. Eventually there won't be any fiat, but we're a ways from that.
Yeah.
That's not overnight.
All right. To round up the gold part, maybe, I
Yeah,
don't know. Maybe you have short answers to this because we have a lot to go. But
yeah,
I
yeah.
kind of wanted to touch up on, um, yeah, the more kind of like geopolitical. I want to talk about, like, how do you see the interplay between stable coins and like a strategic Bitcoin reserve? Like, will Bitcoin be the layer of value, and like, are the stable coins on top, or are they competitors to a degree?
They're kind of different animals. I mean, the strategic Bitcoin reserve is a balance sheet entry that the government could have or hold, very much the way we hold or claim to hold gold ounces. And they have one. I mean, they have the 200,000 plus coins that they confiscated over the life of it, but they could add to it. They could grow it, and that's what the Loomis bill is, and that's what Saylor proposed. And even arguably could sell the gold and say the United States has decided strategically. I mean, this is the Jason Lowry thesis that we should be on a Bitcoin standard, not a gold standard. I mean, China and India and Russia and the Middle East to a degree have bet more heavily, I think, on gold than Bitcoin. Although I think it's naive to think that all those groups don't own some Bitcoin too.
Yeah.
But so if we want to, to the degree, and this is kind of it's interesting. I've heard friends of mine who are very anti-statist are kind of like, hey, why do you want the government to hold Bitcoin, even if it's the best form of money? We don't want to do anything to prop up the government. Let's let the government totally and utterly fail. And I'm kind of sympathetic to that. But I prefer my government to the Chinese government. So I'd like to see the United States choose Bitcoin over gold. Um, so the what I mean, I think we're in a stage now where we're starting to see nation state FOMO. UAE has talked about they're doing it. Oman has talked about they're doing it. The Saudis, I think, are stacking. I think Russia's been mining for some time and stacking. So if this is the best form of money, then having more of it is something that a government should, generally speaking, want to do.
Yeah.
Let's go to the stable coins for a minute. Stable coins are really just fiat on Bitcoin rails. But in a funny way, they kind of help the existing system, because when these guys issue a stable coin, what they do is they turn around and take the cash and they buy treasury bills in
Yeah.
most cases. And
Well, and then
so
they
the
buy
government,
Bitcoin with their yield, right?
yeah,
Tether,
and the
for
government
example.
needs them to buy those treasury bills. So
Yeah.
so there's an argument that says, hey, if we inflate the price of Bitcoin large enough and the stable coins become a big enough part of the transaction volume, that's going to help with the debt problem that the government has. And I don't disagree with that. I mean, it's right now the numbers are pretty small, the stablecoin size of treasury bill bond buying, but take Bitcoin to $1 million a coin, and the numbers won't be nearly as
Hmm.
small. Related item. I mean, I think there've been some proposals. Andrew Hone talked about it. Of, should the government be issuing, and Judy Shelton proposed a gold back one. Should we be issuing debt with a Bitcoin piece to it? I mean, if you issued a 10-year piece of debt with a low interest rate, and maybe you took 10% of the money and put it into Bitcoin, and then the government shared the Bitcoin upside with the holder of the debt and the government, this would be a way for an increasing price of Bitcoin to help get the government out of the debt imbalance that it's in.
Yeah,
It's kind of a brilliant idea.
that was a
Uh,
fantastic
yeah.
presentation
Now,
also.
whether they're going to do it or not, or whether we can get a consensus to accept that, sadly, I think that's probably quite a ways away. But look, we're in a mess. We're in a monetary mess. There's no doubt about that. But this is not the end of the world. I mean, it's pretty straightforward. We've just got too much debt relative to the underlying GDP and the underlying price of everything. So we need to either inflate the underlying price of everything or mark down the debt or both. And this has happened before. Roosevelt did it in the 30s. He, grabbed the gold and then marked the dollar down in gold terms by 70%. So, and when we return to a sound money standard, things will get much better. So, but the transition there's no way, unless we want to have a Great Depression, there's no way that the transition is not a one-time big inflationary event. It
Mm.
just is. So what does that mean? That means anyone who owns bonds is going to get crushed. Anyone who owns cash is going to get crushed. Anyone who has a fixed income pension is going to get crushed. I mean, they'll still get the pension paid out, but it's just not going to be worth as much because the price level is going to go a lot higher when we remark all the debt properly. That's what's going to happen.
Yeah. All right. Let's switch to a question that I got like I think maybe 5 times even
Yeah,
in different ways.
manipulation.
Yeah.
Yeah.
So, what are your thoughts on the FUD around Bitcoin being captured by TradFi with like ETFs, derivatives, etc.? Is there a significant risk of the BTC market suffering the same fate as gold? And yeah, like what will be the factor allowing Bitcoin to actually overcome that kind of like breaks on aspect of Wall
Yeah,
Street?
so
You know?
I think it's a great question, and it's something I think about a lot, and I think that I think it's a risk. I don't think it's as significant as the gold risk, and remember they've had since we went off the gold standard in 71, so they've had 54 years to figure out how to manipulate gold. And they've gotten really good at it,
Hmm.
and they've created a lot of paper gold, and gold never went up 400% in a year. A big year up for gold would be 20%, and the central bank could print money to cover that. If you look at right now the derivatives in Bitcoin, the futures market, the options market, the over-the-counter market, they're not very big relative to the total size of the Bitcoin outstanding and the amount traded per day. So, reportedly, there's not a lot of quote unquote paper Bitcoin, but there's some. And I think there need to be laws passed. I talk about some of these in the books, limiting the size of derivatives to keep Bitcoin honest. But I would say two things are in favor of Bitcoin not being captured and manipulated like the gold market. The first is that we can all see the chain, and the chain is transparent,
Exactly.
and we know where it is. And if we get to a world where many more people are forced to publish proof of reserves and what their addresses are, well, then we can truly see what's going on. Everyone can look at the same thing.
Yes.
So that's item one that I think speaks against, the issue. I mean, and in the case of gold, I mean, nobody really knows what anybody has. I mean, all people claim to have different things, but nobody knows.
Hmm.
Um, the second thing I would say is just the volatility of Bitcoin lends it. I mean, it makes it harder for them to manipulate it, because if they get caught on the wrong side of it, they're going to blow up, and the amount of money they're going to have to print to cover that blow up is going to be really big and obvious, I believe. So therefore, and so I'm not sure, I'm sure that when Bitcoin did its thing and went from 10 to 50,000 back in the 2020 timeframe, there were alarm bells going off all over the central banking world, like, holy shit, we got a real problem on our hands here. And I'm sure they've been working on solutions to it, but I'm not sure they're going to be able to come up with one. But having said that, I watch it carefully, and I think it's always a potential risk. But it's different than the gold market. I think they haven't had as much time to do it. It's more transparent, and the moves in it are so much more aggressive and larger that you certainly couldn't do it without nation state backing for doing it,
Yeah.
or BIS level, BIS and Federal Reserve level backing for doing it. And I'm just not sure they're going to wade into that pool. And they might. I mean, if their fiat is threatened enough that they feel like they have to, well, then they might start creating and selling paper Bitcoin. It's possible, and they could do it. I mean, the other thing I would add is that they could do it off book. I mean, the gold slam that took place from 2011 to 2015, I'm pretty sure they did that off book through the Cayman Islands. and I'm pretty sure they did it with the BIS and a bunch of hedge funds, and I'm pretty sure that they guaranteed all the people in the trade that they would cover losses if any. And of course, it was successful,
But
so there
isn't
weren't
this
any losses. And you
yeah.
have to remember, when you have a printing press, if you're willing to break the rules and cheat, you can print whatever you lose, right? I mean,
Hmm.
that's
Well, I think
so
that the verifiability argument, I call it forced verifiability,
yeah,
because I know I can ask you, I can ask you, right? And I mean, anyone can ask you, and if you say like, no, I'm not doing that, that puts a dent in your trustworthiness to a degree, right?
right,
And then people have to, do with that whatever they want, basically.
right,
But I think this is why we shouldn't stop talking about Bitcoin, because along the way, if more and more people understand this, you cannot be tricked by these dirty fiat games anymore, right? Because you can
correct,
ask for a proof of reserve, you can ask for signing of a transaction, etc. And so
right,
I do think, when people think about the FUD, I think it's this what we're talking about, I think it's legitimate, and it will definitely be tried, like no doubt about that. But if you zoom out just a little bit, you see that over time that doesn't really influence the path of Bitcoin, because eventually that forced transparency or verifiability is ingrained in it, right? So
I
over
think that's right.
time, uh,
I think that's right. I mean, what it all comes down, Bram, to what kind of outside the system structures can they, how big can they get the futures of the OTC market for Bitcoin? You know what I mean? So
I mean,
and
but
are
if you don't get Bitcoin delivered, then
well, I get it,
yeah.
but I mean, I mean, or think about it. If you had an evil actor in the ETF world, that were selling Bitcoin, but selling what claims to Bitcoin, but then not actually buying the coins, right? I mean, that would be paper Bitcoin.
Yes, I agree.
Now, I think because of all these ETFs are audited, in the gold world, I'm pretty sure that happened with GLD. But that's because GLD the prospectus literally said they could trade in futures and derivatives. And so I think GLD owns a lot of paper gold that when the music stops, gold goes to 10,000. GLD says, hey, give us those gold ounces. The person who wrote the contract could be Lehman Brothers and say, sorry, we're bankrupt. So, right. So, if somebody is stupid enough to accept paper Bitcoin,
Yes.
and not have the keys, well, then we're going to have paper Bitcoin.
Yeah.
So it's not
But
it's
that's
not
the
a
game.
zero
That's
it's not a
fine.
zero probability
Yeah,
event. Do you know what I mean?
I agree. But I think it's part of the game that some people will try to play, and that's okay.
Yes,
Like we have to accept that too, the fact that that's
yes,
going to happen,
yes.
right?
Well, Caitlin Long is very smart on these issues. Watched it very closely. Knows how manipulated the gold market is. She said, "Look, she's told me several times. She said, Larry, I think someday, we're going to see a GSIB blow up. They're going to be on the wrong side of the Bitcoin trade. They're going to blow up."
Mm, yeah.
um,
I have to think about, I think a few weeks ago there was a Bank of England like
yeah,
press conference where they
yeah.
said like, yeah, it's taking some time to take the
Oh,
gold
wasn't
out
that
of our vault.
hysterical? Yeah, yeah, yeah.
Oh my God.
Yeah, yeah.
But
Oh,
seriously,
yeah,
like
there are lorries in the road, and the stuff's kind of
yeah,
heavy,
and
and we're
then
having
it's
a hard
like
time. Yeah,
misplaced, and yeah,
yeah,
there's so many bars and these numbers, and there's an old
yeah. Right.
system and a new system, and I watched that back, and I mean, maybe
Yeah,
Bitcoin also gave this to me, but I'm watching that and I just think like, yeah, if you are watching this,
yeah,
and you believe this, then yeah, well, you
yeah.
deserve what's
Do you have
coming. I
any? Do
don't know
you have
what to
any
say.
trust in these people that they really
Yes,
have the gold they claim to have? Yeah, no,
yeah,
I saw
yeah,
that same thing. I was like, you can't make this shit
wild,
up, right?
wild, yeah.
Yeah.
I want to check. I know we
Yeah,
have
I can
like,
go a little. I can go a little bit over. I've actually. I gave myself a half hour cushion, but
okay, I want to be mindful of your time, so
yeah,
I'll think about what I wanted to ask you next. Yeah, maybe a combination of questions here. Like we are obviously very optimistic about Bitcoin, decentralization, etc.
yeah,
But if this becomes too big, as you kind of just alluded to, right? Yeah, there is inertia of state power in general, right? Everyone is very slow. Central banks have a resistance to losing control. Do you think there's a possibility? And I know, so people don't have to comment. Like I know you cannot fully ban Bitcoin, but they can try.
oh yeah,
They can tax it and
oh yeah.
whatever taxes, blocking on ramps, off ramps, etc. Um, yeah, do you think this is a possibility? eventually my argument for this is, well, people would move, right? If you truly understand what Bitcoin is and you live in a country that's going to block you off, like you literally move, and
I think
you
that's
can do
right.
that. That's a big thing.
I
But
think that's right. I
yeah,
mean,
what
look,
are
I
your
mean,
thoughts
I've
here?
heard people say, well, they could shut down the internet. I think that's kind of unlikely.
Yeah, that's fiat. I just
Yeah,
replied that in the chat, like that. That the EMP is coming, the nukes are coming, the bombs are
yeah,
coming,
right.
the
Well,
internet
look,
is
I
going to
mean,
be
if
taken. That's
we have a
peak fiat.
thermonuclear, yeah, if we have a thermonuclear war and the world's destroyed, then Bitcoin's no.
Different problem. No, but this is nihilistic thinking. Like, if this is what you think is going to happen, then why are you discussing Bitcoin
Yeah,
with me on the
yeah,
internet? Like,
buy
you got to
guns
prep.
like her and yeah, wait for the end. I mean,
Yeah.
yeah, look, I mean, don't get me wrong. I think some countries could attack it, and if the U.S. decided to attack it, that wouldn't be good for it. But the chain will move. The chain will live. I mean,
Yes,
you know,
that's the point.
and you know, it will be sound money forever, in my view. And yeah, I mean, I envision a possibility of the United States. I mean, so Team Blue wins, and the dollar's really failing. Inflation's extremely high, and Bernie Sanders and AOC say, you know, it's these evil sound money people who are ruining our fiat system, and
Yeah.
we need to ban gold and ban Bitcoin and tax them at 90%. You know, and I don't
We
know if
don't want to take responsibility.
yeah, we don't want to take. I don't know if they could ever get that through, but you know, I mean, they could maybe do it through an executive order, and you know, there'd be a hell of a lot of pushback, and there'd be a lot of boating accidents, and yeah, I mean, I think there'd be a lot of citizens here, who, including me, who would say, fine, you know, well, one, I'm not selling any, so I don't care about the tax. But you know, the banning it or the send it in, you know, if they decide to grab it, I mean, they can go to all the ETF companies. This is a negative of an ETF, right? That ETF holds your keys, not you. And they could call up BlackRock and Fidelity and all the other ETFs and say, you know what, cash everybody out, give them dollars, send the coins to us. You know, that's a possibility. And so,
Yeah.
I think for those reasons, you know, having your own keys, having control of your coins is worthwhile doing. And yeah, I mean, if that happened in the U.S., I wouldn't be living here. You know.
Yeah. So maybe if we talk about, we have to talk about Bitcoin more. We have to
Yeah.
tell more people about it. I'm trying this. You wrote a book. You're talking about it a lot. What is the best way to orange pill your generation? Like our parents, basically. Are there
Yeah.
any like conversation starters or
You know,
talking
the
points
best.
that
I
have
mean,
worked?
you know, I mean, obviously, there's a book plug. I mean, the best. You know, right? I, I mean, that's a layup for my book. I mean, just the book is, in my words, my story, the strongest argument I could make for why you need to have sound money, you know, gold and Bitcoin. And you know, it lays out how and why you've been screwed, and it lays out how it's coming to a head. You know, Lynn's "Nothing Stops This Train." I mean, we're in the critical phase now, Bram. I mean, gold's at record highs. Bitcoin it's off its record high, but pretty nice high around 106 or 7, whatever. I mean, fiat currency is dying, you know, and so I think what I try to do is just, you know, sound the alarm, and you know, maybe I'm like Noah and all the other people are like, well, yeah, it's just a few raindrops, who gives a shit? But you know, I keep saying, no, you know, you really need
Yeah.
to get, you know, this is a Titanic, you really need to get on this boat, you know, this life raft. And you know, I think that's all we can really do. Like I say, the book, I think, I mean, the feedback I've gotten from some fiat people who've written it is, oh, well, that really made me think about this. Maybe you're right. And that's how change starts to happen. Do you know what I mean? And then
Yeah.
it spreads. And, you know, I hope 10 years from now, it's like, it's obvious I was right. And those who listened have benefited from it, you know?
I mean, this is a layup for my next question. Life in the West is pretty great. So if you come across a person that's like, no, it's not so great, the underlying thing is broken, and this is where we're gonna go, and more. I've had many people talk to me like, yeah, say to me like it's like doom talk, etc. And then I think like, no, but do you think I like talking about this? Like, well, I like exploring the solution, but getting to
Yeah.
grips with the problem, right? And I mean, this is my question. Like in teaching people about monetary history, fiat failure, what have you found to be like the biggest psychological obstacles? Is that denial, confusion,
I think,
anger? What's the
yeah, it's
dissonance?
all the above. I mean, there's a lot of denial. There's a lot of recency bias. Well, it's worked okay for so far, and I don't think it's going to fall apart tomorrow. And some of them are like, they've known me for a long time. They're like, oh, you've been saying this for 15 years. It'll be another 15 years before you're right, and they could be right. But the mathematics of the situation suggests to me that the time when I'm going to be very, very right is getting much, much closer. And that is just, the size of the deficits, the size of the printing that's going to be required, the size of the debt. We're now starting. I mean, there's a chart in the book that shows how other countries, when they reached 130% of debt to GDP, they almost all, to a country, they had a currency event, depression, deflation, or I mean, inflation or hyperinflation. And, the US is at 125% debt to GDP. So we're right there. Feels to me like it's coming now. Like I say, I can't predict the exact timing on it, but I think that, to ignore all these historical examples that, or to ignore the emerging countries who've done the same thing we're doing,
Yes. Yes.
and to for some reason think that the outcome will be different just because
Yes.
we are the great dollar-based United States, that just doesn't strike me as logical.
Yes.
So,
This has helped me a lot in my thinking. Just seeing the fact that it happened before in history and
right.
realizing those people weren't any different than us, and that
No,
system wasn't any different than ours,
that's
right?
right.
Like, yeah,
Yeah.
this
I mean,
happened before.
you do stupid shit, you get stupid outcomes,
Yeah,
I mean,
exactly. Well, yeah. And so, we obviously talk about Bitcoin. You argue that fixing the money would fix much of what's wrong with society, and I think we touched upon
yeah.
quite a few things there. What what do you think would be most directly improved by returning to a sound money system?
Well, I think the biggest and best outcome of a sound money system would be it would reduce the probability and the size and the severity of war. I think that the governments, the military-industrial complex in the United States, have really kind of gotten away with genocide almost, and just criminal behavior that's killed thousands and thousands of people unnecessarily as a result of the fact that they can debase the currency to pay for it. I think when when you look at wars, I think that if you get to the stage where you have to go to the populace and say, "Hey, guess what, guys? We need to fight this war, and you need to give up 70% of your income in taxes to fight it." Citizens are going to think real hard about whether they want to take that hit to their living standard to go fight that war. But that's kind of what happens. We're going to fight this war, and we're going to dilute your currency by 70% or whatever the number is. I mean, in the case of World War One, it was 50%. I mean, so they used the newly formed Fed to finance World War One, and in the space of 1914 to the end of the war, 1918, well, just after the war, they basically doubled the money supply and doubled the price level. And so, had the US government come to the people and said, we got to decide whether we want to fight this war. We're going to tax you all at 50%. And of course, there was no income tax until 1913 either. I think the average person would have said, hell no, I'm not doing that. Skip the war. We're not doing it. Let those other people fight amongst themselves. But they didn't. And so, they hit it, and they paid for it with inflation. So, if we can take inflation away, then suddenly the government that wants to fight a war doesn't have the money to do it.
Yeah.
And so
This is what
somehow,
Safety also says, right? Like
yeah.
if you
So
have limited
there
resources,
has to be a
then
negotiate. If to
yes,
the degree there are human differences, there has to be a negotiated solution.
yes,
And honestly, this whole notion of big nation states, I think, is going to, it's going to break down over time. I mean, I view the world in different terms. I view the world as, helpful, constructive, hardworking, honest citizens. I think that's probably, I don't know, 80 or 90% of the people in the world. And then maybe there's, 5 or 10% which are more malicious. And then there's maybe, you know, 2 or 3% that are real psychopaths and like killing people. and, And so to me, the role that government should play is, just trying to make sure the psychopaths get locked up. So the government should be the fair referee with the police and the courts and that kind of thing. But I think if you wander around the world and go to visit countries, I think you're hard pressed to find, other than the sickos who the warmongers, you're hard pressed to find people who want to go to other countries and kill people. I
Yeah,
mean, I just, I don't think that's I don't think there's a real demand for that. You know what I mean? Um,
I agree. I think it's also kind of a part of the system that many people just never really think about, pay attention to,
right.
doubt, whatever. I think that's probably more so in a Western world. I mean, in the Western world, I think we also should be honest about, I think we have these living standards because we pillaged the rest of the world, right? And
Well, that's right.
therefore, it's also
There's
another
certainly some of that.
topic.
I mean,
Yeah.
yeah, we've waged, I mean, the strong dollar and the resource nationalism and all that, and we've waged economic war on a lot of countries.
Hmm.
And yeah, and part of our living standards are based upon, the unfairness of fiat.
Yeah.
But I think that again, if we can get to a sound money standard, that unfairness I think will go away.
All right. To work towards our wrap up here,
Yeah.
what makes you most bullish on Bitcoin? Um, Bitcoin's
Oh,
evolving role in the global financial system over, let's say, the next decade, and what do you think are the biggest challenges?
yeah. So I'm extremely bullish on the government response. I mean, I think the ETFs and the Trump administration's embrace of it and the strategic Bitcoin reserve and maybe even the Loomis bill passing, those are all incredibly positive developments. The nation state FOMO that's probably starting to emerge, the fiat lords like Larry Fink and others, Ray Dalio, realizing that this is digital gold and that it is important. You're really starting to see consensus, and I think everyone's going to have to bend the knee eventually. Many already have, but many, many more will. So I'm incredibly bulled up. We should talk about this cycle. A lot of people say, "Hey, has the 4-year cycle broken?" I don't think it has. I think that we're edging toward a big print. That's what the book talks about. I think that happens in the next 6 to 18 months. Um, the Right now we're still, liquidity is kind of tight, and I think stock market's going to fall, and that's going to mean there's going to be less liquidity because that's money going to money heaven. Bitcoin is still sadly associated with risk on in the stock market.
Mhm.
And I've actually said, I said it at the Mining Disrupt conference last week. I mean, I could see Bitcoin with a 70,000 handle, 75,000 for a brief period of time. I mean, we're forming a big flag, very similar to the one we formed around 58. I think that as the stock market falls and maybe the bond market doesn't respond in a good way, we're going to see more accommodation from the Federal Reserve, and that will get them, because they're going to be afraid of the employment side of their mandate, and that will get the money supply growing again. And when that's obvious that that's taking place, Bitcoin and gold are going to shoot like rockets out of the hole. In fact, Bitcoin more so, because gold actually is already, in my view, gold's at a record high today. It's been just I mean, I've been
Hmm.
shocked. It's relentlessly marched from, broke out at 2070 last March, and now here it is at 3,100 plus, I think. So gold to me smells what's coming, and this has happened before. And then coming out of the 17-18 period, this happened too. And so Bitcoin follows after gold, but harder. And so, when the next print, when it's obvious that they have to and are involved in the next print,
Hmm.
big print,
Yeah.
I fully expect we'll see 140 Bitcoin this year. And I think that the cycle high in this cycle, some thinks, 1,500,000, that's possible. I don't rule that out, but that would be quite an extension of the trend, and it would be out on a limb, subject to a correction. I'm much more comfortable with kind of a 200, 250, 300 upside on the cycle, and then we correct back to half of that. I don't think. I think as it gets more broadly distributed, the corrections are not going to be as large as they
Yeah.
have been in the past.
Yeah. I agree.
The
No,
volatility. I mean,
80%.
there's an indication that the volatility in it is slowly decreasing. So
Yeah, I don't think we'll get to 80%
no, no,
drawdowns
80% is
anymore.
out of the cards. I mean,
I
maybe
think
50 or
50
60.
max. Yeah,
Yeah.
50, something like that. All
Yeah.
right. My last two questions, Larry.
Sure.
You end your book with a call to action. What does that action look like for the average person? Should they start stacking Bitcoin, or do we need more political and cultural defiance?
Well, it's a two-piece call to action. I mean, the book was meant to help people protect themselves financially, because I think there are a lot of people who don't understand what's going on, and they should be thinking about what's going on, and protect and positioning themselves for a world that'll look different than the world today. So the book addressed all that. So yes, they should stack Bitcoin and or buy gold, silver. But probably more importantly, at a societal level, this fiat system is failing. We are headed toward a new monetary system. The quicker we get there and the quicker we return to a sound money system, the quicker things will get good again. Things will be good when we go back to sound money. That's the evidence of all countries which have experienced hyperinflation. When they return to sound money, things get better fast. And so the call to action, I think, is if you understand this, if you didn't understand it, you read my book, you now understand it. Or if you understood it, you read my book, think about who in your circle of friends and your circle of influence you can say to them, hey, this is a book you should really read. This explains what's going on, and you should really read it and think about it, because you know the only choice politically, societally, the only place we get to place two votes. We vote with what we do with our money. We've all, if you make more than you spend, you've got savings. Where are you going to put it? Okay, vote Bitcoin, in my view. The second thing we do in the Western democracies is we actually do have a political vote. And as time goes by and the problem becomes more acute, inflation's higher, and Keynesians fail, we're going to have more sound money politicians. They're going to be more Cynthia Loomises, they're going to be more Thomas Masseys, more Ron Pauls. I mean, they're going to be people who get it and who understand this is the problem, and they're going to run for office on a sound money platform. And if they get a lot of votes off of that and we vote for them, that's going to help us move in that direction, which is what we really strongly need to do. So to me, it's an educational, spread the word. I mean, good ideas spread by word of mouth, and friends tell friends, and I mean, I've had a lot of people I've been interacting with, gold bugs and others, who were extremely skeptical of Bitcoin, and through conversations with me and or reading my book have kind of said, you know what, you're right, I'm going to get some.
Yeah.
And then that's the start, and then they learn more, and then they tell people, and right, and this is how good ideas spread. And when we're all, I mean, we outnumber the people who control the fiat system and who benefit from the fiat system. It's a small number, and we outnumber them massively. So if we had a
That's a
whole,
good point. That's a
right,
very good point.
so
Yes, it's
if we
very
had a
true.
whole army of Bitcoin crazed people charging the castle with swords and torches and pitchforks, we could get sound money laws put into place. We could
Yeah.
move towards a Bitcoin standard,
Well,
right?
and I think the fun thing, so Larry's not calling for for that, but I think the fun thing here, the interesting thought, is that you can actually move now. Like you can do that, right? Like
Oh
you can
yeah,
adopt Bitcoin now. This was one of my own biggest insights when I just realized it's not buying Bitcoin. I'm exchanging one money, a
right,
bad money, a soft money for a hard money. Like that's
right,
just what I'm doing. I'm
yeah.
moving into this other system. And when I started doing that, yeah, my life literally changed. Just my whole thinking
Well,
and
that's the
all
thing.
my
I mean, the thing I hope people who aren't in the system yet realize or come to understand is how much better you feel once you get here. Because I don't, I'm not worried about running out of money anymore.
hmm
I
well, and
know that I have the soundest form of savings available. I've got enough of it that I won't run out of money. And I think people in the fiat system, they're on a treadmill. They're just constantly working to try and make sure they can maintain their lifestyle and or save enough to maybe have a little bit of retirement at the end of their life.
yeah,
And that's just a terrible way to live. What if you knew that every dollar you put away would buy you more in the future?
yeah,
So that you're saving for your
that is
future.
a life hack. That is the life hack, by the way, guys.
Yeah.
I
I
think
mean,
once you realize that everything you spend now or everything you exchange now to Bitcoin will have a bigger purchasing power in the future. Like that
right.
is the hack, and that's what
Right.
makes you optimistic about the future.
That's exactly right. You can't wait. Yeah, you just know it's going to be great.
Yeah,
Yeah. I mean,
yeah,
you buy,
I
buy
love
one
that.
car now, and in 10 years, that money, that same amount of Bitcoin would have bought you five cars. You know what I mean?
Well, and also the amount of block subsidy, that is going down. So if you think
Yep.
about what's going to be the block subsidy in 10 years, I don't know the exact number, look that up, buy that, and then think about how much energy goes into creating that block. Like you can buy that now basically with a discount if you look at it like that.
Yeah.
All right, my last question, Larry, and usually I ask people, what is a core belief you will never let go of, but uh, I already had you on in episode 31. So I asked that already. So for the people listening, look, search for Larry's name on my YouTube, and you can find our previous conversation. And now I actually wanted to ask you, like I said, you've been a big part on my Bitcoin journey. So I think this is a pretty selfish question, but it's also for my audience, for my
Yeah.
generation. I just wanted to ask you for, do you have some life advice that you'd like to share with
Oh,
with
sure.
millennials? Can be about anything.
Oh, yeah. Well, for millennials, look, everybody's got to decide how they want to live their life. And when I was young, I drank, and my kids, I've advised them about this whole issue. And I think in your 20s and 30s, if you're drinking alcohol, it's fine. But in my mid 30s, I went dry. I just quit alcohol completely. I determined it was bad for my health, bad for my mental state, dangerous, and as we would say in crypto terms, it was a shit coin. And so I've spent my life dry with no regrets, and very happy that I've done it. It's been great. And I highly recommend that everyone consider that as one of the possible choices. And some people are very able to kind of control it and be very measured. But for many people, like myself, it's harder to control, and there's no point in doing it unless you're going to drink too much, and then that leads to all kinds of problems. So I would recommend that. Most people your age don't realize how great it is to have a brand new body that's fit and young and heals quickly and doesn't break down. And you've got some cushion time between your 20s and 30s and when you hit 50. But when you hit 50, one thing you'll see is that no matter who you are, your body starts to break down a little bit, and that you can delay that and prevent that through fitness and fitness activities. And so I would say, as a second piece of life advice, figure out a physical fitness activity or set of activities that, involve strength and cardio and so forth that you enjoy, and recognize that as you age, that becomes an increasingly important part of your daily mission. Um, so in my case, the book talks about this. I found CrossFit, which is a really efficient, hard way of staying in shape. And so I highly recommend that to people. So I would just say those are my two pieces. I've advised my kids of this, and those are kind of advice I would give to young people. I would say probably the final one is just sit with a calculator and do compound functions and look at how, if you save money and you compound it at 10 or 15 or 20% a year, think about where you're going to be when you're 60, because all you guys are going to be 60 someday. And the money you spend today versus saved, this is how people end up rich. I mean, they take 10% of their money and they put it aside, and they invest it wisely. And that if you want to have a financially comfortable future, this is a habit that you should learn in your 20s and 30s. And I've advised all my kids on this as well, that you need to put 10%. This is The Greatest Man in Babylon is the book that talks about this. You need to put 10% of your money away every year, or your earnings, and you need to save it in a safe place, and then that safe place needs to compound. And if you start that in your 20s, I mean, it's virtually impossible to not end up in your 50s and 60s with a big pile of money. So, and by the way, we've got the greatest savings technology ever devised. So, get after it, right? Save, and then save in Bitcoin terms, and I think your kids and your grandkids will be happy that you did. So,
I love that, man. Well, thank you so much for this insightful conversation. I
oh, I enjoyed it
really
very much,
appreciate your
Graham.
time. Thank
As I
you.
think we talked about, I'll see you in Vegas, and I'll probably see you at Prague as well if you go
Yes.
there. So,
Well, thanks
um,
again, man. I
yeah,
really
thank
appreciate
you.
you. Thank you.
Okay,
Cheers. Bye.
cheers.
Boom.
Okay.